Now, it is the most important aspect of revenue management, and it's essential for revenue managers and revenue associates to identify the hotel's financial position. And usually, the income and expenditure statements, the balance sheet, and the cash flow statements are of significance because it is easier for revenue associate or revenue manager or for the entire revenue management team to analyze the financial performance of the hotel compared with the previous year. At the same time, use metrics as key performance indicators with the help of the financial statements. Now, moving forward, let's understand the summary profit and loss statement. Now, profit and loss statement, it can be abbreviated to P&L statement. It is a financial report established on a fixed period of time. Now, there's no fixed time. Usually, there's no fixed period of time. Usually, hotels either follow the format of 1st January to 31st December as a financial year, or sometimes it's 1st April to 31st of March. Now, in the income and expenditure, the P&L statement, it shows the total of revenues and expenses equals profits. And this is how it has been distributed and divided. Room revenue, number of rooms, occupancy, room nights available, room nights sold, ADR, and rooms revenue, F&B revenue, and other areas. So total revenue, budget and actual. So this is just a comparison as a template to help us understand the concept of profit and loss in a better manner, followed by a cash flow statement. Now, a cash flow statement means the net operating cash flow of a hotel after all taxes, income taxes, excepting income taxes, insurance, salaries, utilities, and other operating expenses, and all other sums that are applicable operating agreement or any related ancillary agreement required the applicable operator to pay from the cash. So basically, at the most fundamental level, a company's ability to create value for shareholders is by its ability to generate positive cash flows, or more specifically, maximizing long term free cash flow. It is the net amount of cash and cash equivalents being transferred into and out of a business. Here we can see the receipts, we can see the disbursements or the expenses, then total operating disbursements, net cash flow from operating activities is the total operating receipts minus total operating disbursements. We get net cash flow from operations, then cash flow from financing activities, reserves or loans. Then in the end, total net cash, the cash balance at the beginning of the year, increase or decrease in cash during this period. Here again, cash is, there's been an increase in cash because operating receipts exceeds operating disbursements and financing activities. So we are left with a total cash of this much. And cash at the end of the period is 513,132. So this is what a typical cash flow statement looks like in the context of a hotel. Now followed by a balance sheet. Now balance sheet is a financial statement of a company or a hotel which includes assets, liabilities, equity capital, and total debt, etc. at a point in time. So point in time would be, say, from 1st April to 31st March being the financial year. And assets are those things that the company owns, and liabilities are those dues that the business owes to the vendors or to other sources. And at the same time, how the business has been financed either by debt or by equity. So there's the owner's equity. So again here, with the help of the balance sheet as well, Total assets should be equal to the total liabilities and equity. This is a simple formula which applies in the balance sheet. And with the help of the balance sheet and the income and expenditure statement, the profit and loss statement, it is easier to compute several KPI indicators or metrics that are extremely vital and very, very significant in the concept of revenue management. Now, KPI metrics here again, occupancy has been explicitly mentioned here. In the rooms department, this occupancy, the percentage of available rooms or beds being sold for a certain period of time. So occupancy is rooms sold by rooms available. Average daily rate is room revenue by room sold. And revenue per available room is revenue upon room nights available. And total RevPAR is the total revenue per available room. Net RevPAR is room revenue minus distribution costs divided by available rooms. So with the help of referring to the financial statements, it is easier for the revenue management team to work with these metrics and to compute the same and to compare and contrast the results. Similarly, in the F&B section, there's revenue per square foot in restaurants, revenue per seat, revenue like resident capture rate, F&B cost of goods sold, beverage cost of goods sold, and the most fundamental um, formula is beginning inventory, opening stock plus purchases minus closing stock upon sales. So this is how we compute the costing. It's a very vital aspect of revenue management. Now there are indexes, as I was mentioning. The market penetration index, which measures a hotel's share of the market demand, an index of 100 equals fair share of market occupancy. Greater than 100 means is more than a fair share, and less than 100 would be less than a fair share. So here again, competitive sets are considered over here in these indexes. So we compute it in this manner, the MPI as a hotel occupancy upon a competitive set occupancy into 100. A competitive set occupancy would be an average competitive set occupancy and the hotel's occupancy with regard to the average into 100 and the MPI index is calculated. Similarly, for ARI, compares hotels ADR to the aggregate ADR of the competitive set. So again, index of 100 applies in this case as well, and even in revenue generation index and FNB GI or FNB RI. So index is into 100 and the formula is hotels ADR upon aggregate ADR into 100. And for revenue generation index, the hotel revenue per available room upon aggregate RevPAR into 100. And same for F&B as well. Hotel F&B upon aggregate F&B into 100 because it compares hotels F&B revenue to the aggregate of the competitive set. And now usually the names of the competitors or the hotels would not be mentioned. However, it's part of the policy of STR, Smith Travel Research, of not to reveal the identity of the members of the competitive sets. However, a certain code is used to mark as an identification. Then, with the help of the balance sheet, the financial position of the company can be computed. The current ratio and the quick ratio, which is current assets upon current liabilities or current assets or cash upon current liabilities based on cash in hand. Return on equity is a percentage of return on the owner's investment, which is profit upon owner's investment. And return on capital employed would be profit upon all investments, including owner's investments as well as others. So with the help of these financial statements, we hotel revenue managers can work very, very well with hotel metrics and formulas, as these are key performance indicators and are extremely vital in determining the financial health of the company or the hotel in context. Now let us understand there are several reports that are used by revenue managers. One such report is known as the STAR report. Now the Smith Travel Accommodations report is the full form of the STAR report because it analyzes occupancy rates, room revenue, average room rates, revenue per available room, and the market share. This above information is usually collected by STR, which is known as Smith Travel Research. Now, this is a company that tracks supply and demand data for the hotel industry and even um, provides competitive set information and works on indexes and sends the same to hotels and all members of the competitive sets. They collect performance data from hotels globally and they deliver monthly, weekly, and daily data to subscribers. Subscribers would again be the hotels in question because it's important to understand how good or bad the competitors are performing during a given period of time. Now, this again is a common practice for chain headquarters, management companies, and owners to provide this information directly to STR, who in turn they share this data in their star report. So again, the star report is prepared and the revenue managers do refer to the same. A typical star report looks like this, whereby the occupancy mentioned here, the ADR, and the revenue per available room. And the occupancy, ADR, and RevPAR, the percentage changes are also mentioned. And this is directly issued by STR. And here again, it's my property versus the competitive set. Upper upscale hotel in top metro markets. So again, it considers location, it considers the category of the hotel as well. So here we can see STR number 123, ABC, chain ID, ABC 123, management company none. So all these, as I was mentioning before, that all of this information is usually kept confidential and not the identities are not revealed to each of the competitors when the competitive set reports or the star reports are being used or worked on by STR and as referred to by the revenue manager. Now let us understand the role of a revenue manager. Now, the revenue manager does play a very vital role because he or she they're responsible for forecasting revenue and developing appropriate pricing strategies for hotels and organizations. Now, at the same time, they have to work closely with the front desk department, the sales team, the hotel managers, and even with the finance and accounting departments for preparing business strategies and reservation costs. They even work hand in hand with the marketing and sales team for devising appropriate business strategies. They work with the accounting and finance department in order to understand and analyze and review the financial performance of the hotel and thereby work on hotel metrics as well. They develop pricing strategies for services or products marketed to the target customers of a firm. Now, here again, I'd mention here that revenue management is not just confined to hotel rooms, not just confined to F&B outlets, but to every revenue generating aspect that I had mentioned in one of my previous slides. That revenue management even considers the sale of spa and therapeutic products or the sale of items in the gift shop or the use of amenities in spa and how much uh, how many massages or how many therapeutic treatments have been undergone over a certain period of time. Here again, revenue, any aspect of revenue being generated in a hotel is the main concern of revenue manager because he or she then don't just look at the room revenue or F&B, but they look at the overall revenue and the progress of the hotel. The role includes planning promotion campaigns such as coupons, giveaways, and contests, and um, optimizing certain strategies such as discounted pricing during low peak seasons and promotional campaigns when the demand is low, working closely with the marketing and sales teams to come up with appropriate pricing strategies. Other roles would include negotiating advertising contracts, conducting meetings with clients to offer technical and marketing advice. So basically, a revenue manager, he is pretty much an all-rounder because he is not just confined to marketing and pricing and sales, but also considers finance and even sees the overall health of the financial performance, and the revenue generating aspects of the hotel. And is the main primary role of a revenue manager to find profitable avenues for the hotel. As again I mentioned previously, that it's important for a revenue manager to keep updated with the current marketing trends and changes. Now, for example, if a COVID-19 situation has emerged, and how best can a revenue manager tackle the same? So this accordingly has uh, directly impacted the sale of hotels as well. But at the same time, it's important for revenue manager to be abreast with the current trends to devise strategies accordingly. Essential skills would include analytical skills and leadership skills and creative thinking, organizational skills, strong interpersonal communication skills, decision making skills, and at the last but not the least, time management, because time is very, very crucial in this regard. Organizations, hotels consider hiring educated and experienced individuals in revenue management, because usually a revenue manager is someone who should have a strong finance background as well, because that's the key. And the revenue manager always works with three key metrics, which is nothing but occupancy, ARR, and RevPAR, respectively. Now, what are the essential traits of a revenue manager? Now, the first trait is relationship management. Now, in order to be a successful revenue manager, it's important to keep a relationship with both internal and external stakeholders. Revenue manager has many internal contacts that need to be maintained from all hotel departments. Having the ability to develop relationships and be influential is all part of the relationship management skill set. Now, there are numerous external stakeholders as well that a revenue manager must prioritize on how much time is given to each of them. One of the most important relationships is with the hotel's IT partners. It's essential revenue managers realize the difference between the partnership and the booking engine provider, if external, and that of the OTAs. So, listening to their recommendations and providing them with information that will help to grow the hotel's direct business is extremely crucial and uh, essential. Being able to manage conflicts of interest between these various relationships is important to ensure the hotel's book direct strategy is maintained. This in turn maximizes profit kept in the hotel rather than paid in commission on booking. Second, a revenue manager, in order to be successful, he has to have a competitive nature and should achieve his targets and goals. Good revenue manager knows exactly how far off target they are for the month and are always focused on how they are going to reach them. They're also keenly aware of their competitive sales results and want to ensure that they are number one. Thus, competitive nature helps to motivate and focus the whole team and is something that should be encouraged. So basically, revenue managers, they by their nature, they enjoy targeting and more by exceeding these same targets. They are driven by revenue budgets and ensuring they achieve them. Now, the next aspect is the next trait is to analyze and monitor data and make quick decisions. Now, every revenue manager worth their salt will pride themselves on their analytical skills because they love data and devour reports on a daily basis, because they work on reports such as this star reports and the competitive set reports. They work on with the hotel metrics and with the financial aspects as well. Now, understanding data is one thing, but making quick and decisive action is another, because revenue manager can quickly detect trends, spot and identify anomalies and opportunities based on the data in front of them. Adjusting pricing and availability is a good revenue manager can do both, taking making quick and decisive actions and adjusting pricing and availability. So they also see the importance of monitoring the macroeconomic factors affecting the hotel's revenue into each market segment, such as sometimes there could even be political factors that may affect the business or may affect customers or guests from from visiting a certain place. So now there are fluctuations in demographic forces. So these are usually identified and analyzed by revenue managers. Now, being flexible and quick to respond to these changes will determine the hotel's success at achieving their targets. Now, at the same time, the revenue manager should also be very successful and make quick decisions. And understanding the cost of distribution for each market segment is at the forefront of revenue managers' minds. Having this knowledge allows the hotel to make more informed decisions when it comes to distributing their rooms and the price at which those rooms are being distributed. Next, creative thinking, strategic decisions, and brainstorming with the marketing team is a very, very important aspect of it. They should enjoy brainstorming alongside the marketing department, come up with creative solutions to low demand periods. The revenue manager needs the confidence to go the road less traveled and use their skills to provide new and creative solutions instead of sticking to the status quo. Then again, attention to detail and monitoring rates and availability is another key responsibility or a trait of a successful revenue manager. Good revenue managers are thorough and likely to double check details because they don't just presume that rate plans are loaded correctly. They always doubly check and see how things appear on the front end. They will ask the advice and opinion of others when it comes to names and description for special offers. Ensuring that rates and availability are open and closed when they should be is something they continually monitor. Then having effective leadership skills, because being alarmed with all the right data and a definitive strategy are the fundamentals that the revenue manager can lead all the relevant stakeholders to follow that particular strategy. Having the skills to influence a team comes from presenting a clearly thought out plan that engages and convinces people. Revenue managers cannot just be thinkers, they must be doers and lead their strategies from the front. They should also be technology savvy or tech savvy and comfortable with systems. Now, there are certain revenue management systems that I will be talking about later on. The most common one would be Beyond Price and RevPar Guru that are very, very widely used by hotels across the globe. Now, they need to be comfortable with systems and ensure that they are getting the most out of them in terms of functionality and reporting. Revenue managers are quick to adapt to new technologies and will embrace all the opportunities that it offers rather than grumbling about the time needed to adapt to it. New technologies, including automation and reporting tools, should not be shied away from, but instead viewed as ways to become more efficient and effective at the job. And last but not the least, they should be inquisitive and assertive and question everything. So finally, the best revenue managers have inquisitive minds. They don't just look at data and accept what it says. They question why it says it to continually improve. They are confident to challenge the general manager and the sales and marketing managers and on the strategies, not confrontationally, but in a way that makes everyone wonder why they hadn't questioned it themselves. They have to be very good psychologists as well and to keep the relationship with uh, the managers and with other departments as well. Because the revenue manager does work hand in hand with the front office department, with the sales team, with the marketing team, with the accounting and finance team. So he does play a very, very vital role.